Hi there traders and investors, today is Friday, February 24. It's time to introduce you to my fresh market review prepared for InstaForex. Yesterday, markets responded to some high-impact news, which is mirrored on technical charts. Now let's discuss what's going on. The first chart is about gold. The instrument has been extending its decline. The day before yesterday, I spotted a great bearish bar. After it has been formed, gold made an upward retracement and printed a lower low of this month. Currently, gold has been stuck at lows. Let me remind you that gold is a trend-following instrument, so it can update its lows a great number of times. The economic calendar contains some major reports tonight. For example, the US PCE price index and exhausting home sales. If the readings are strong as yesterday, the instrument may implement the bearish scenario. Yesterday, the market got to know the revised US GDP and initial unemployment claims. The latter went down last week, thus proving remarkable resilience of the US labor economy. The dip in the GDP doesn't discourage investors. The reading offset negative sides of each other and didn't bruise the gold price amid the US dollar's advance. The news which is due tonight will determine market sentiment. If the data comes strong, the US dollar will assert its strength across the board, including gold. You're certainly aware that gold is traded for US dollars. The euro-dollar pair is carrying on with its slide. Yesterday, I didn't find any trading signals either for growth or fall. Still, let me turn your attention to two awesome targets for short positions. If the downtrend is clearly recognized, the instrument could decline for a long time. What can disrupt the downtrend? Perhaps the news which will be on tap tonight or some magic levels. Here I see a reversal point. If someone believes in such levels, the price has to pass at least 600 pips. I mean that the price could drop to the reversal level and rebound. The instrument could retrace upward. If not, I foresee a big trading volume there. In this case, the instrument will go lower, aiming to trigger the buyer's stop losses placed at the end of the last year. I reckon this scenario is realistic. I don't want to go long with large bets. I plan to set tight stop losses. My friends, you know that I trade using the following strategies: stop hunting, swing trading, and momentum strategy. Sometimes there are such market conditions when I cannot detect trading signals. Most frequently, it happens when the market trades in a clear-cut trend stage. Trend is not my friend. I take part in different forums where traders exchange their ideas. I made the conclusion that most traders don't follow any strategy at all. People trade following their hunch. They find out trading tips in charts. Retail traders don't have a precise strategy. This is bad. I mean, if there are no trading signals under your best trading strategy, it doesn't make sense to enter the market, my friends. Don't try to find tips from correlated trading instruments. For example, there are no sell signals for the euro, but there are sell signals for the sterling. These currency pairs have the only thing in common, the US dollar. Indeed, their trends are somehow correlated, but under different volatility. If you haven't found quality signals for the euro, don't check the pound-dollar pair or the yen-dollar pair for such signals. You trade either betting on the US dollar's strength or weakness. Don't fall into a psychological trap. Let's speak about the pound-dollar pair. I predicted and planned short positions at the end of the last week and early this week. This idea was based on the 1 week setup, called a bearish pin par. If you followed my advice, you should have already earned 1,000 pips. Now we foresee the bearish outlook for the pound sterling with a huge fall. I expect the instrument to break at least the low of the year at 1.1840. I guess this ambitious scenario is realistic. It might come true in case of the robust US dollar's rally. Besides, the sterling could weaken due to disagreement between Great Britain and Northern Ireland. The sterling could slump anytime, and we see large weekly bearish candlesticks. What's going on with the dollar-yen pair? I've told you that I'm tempted to go short on the dollar-yen pair. Still, it's too early to sell the pair. The instrument is following the uptrend. A 50% Fibonacci retracement from a powerful plunge was caused by the events in the Bank of Japan. The yen is set to strengthen, which is confirmed by the abrupt rate impulse. I see a zone of the buyer's liquidity on the chart. Their stop losses will be activated sooner or later. We could open short positions a bit later, when the US dollar's advance is over. We will recognize the moment through a climax candlestick. That's all for today. See you online next week.